Right, Mike Della Vedova from T. Rowe Price. This is the Livewire Rapid Fire. I've got 6 questions and we have but 2 minutes. You ready to go?
Whoa, I'll try. I'll talk fast.
Okay, let's go. Explain what high yield bonds are, like I am a 12-year-old child.
Do you want a bit more pocket money this week? Would you like to get an extra $20? But you don't want to just go to your mum. Write out 4 different promises for $5 each and give one to your mum, one to your dad, one to each of your brother and sister. When the time's up and you tell them when you're going to pay them back, whoever's holding that piece of paper, when that date comes, you give that money back to, and they can swap them amongst themselves. That's a bond. That's high yield bond.
What is the biggest opportunity in high yield today?
Right now, to be honest, the general market. It's earning a high amount of income. If you were to pick a region, we'd say Europe, but it's the income is that opportunity you have right now. It's the income you can generate for some of the highest yields and coupons we've seen in many, many years.
Well, that's good to hear. So what is the biggest risk then in high yield today?
Technically, I should say default. It's complacency.
Yeah, right.
Defaults are always there, but people who actually go, well, this is just the market, it's going to do that, and don't dig, don't look. Complacency is your biggest risk.
Speaking of complacency, true or false? Did ultra-low interest rates help fuel a boom in issuance? And now that we've got rapidly rising rates, will it cause a fizzling out?
False. It's far more complex than that.
If you had to name one region where the most profitable high-yield investments are, what region would you nominate?
We like Europe right now. We just think you're getting compensated for the risks you see far better than anywhere else in the world.
And finally, Mike has been investing in high yield and investing in markets for nearly 30 years. If you couldn't invest in high yield, what is one asset class you'd invest in?
I'm going to cheat and say 2.
Go on.
I'd go for the same type of risk return, split over government bonds,
Right.
and probably global equities. At the end of the day, you're matching up, high yield sits right in between, and you're matching up the same type of risk return. You're getting that income and you're getting the potential upside from you see on equities, but you're relying on that income from government bonds. I'd pick the 2 and run a balanced portfolio that way.